Looks like we're good. Just post a link in the room. We're good. Ladies and gentlemen, welcome to the 400th episode of the Newsbeat Show. We have a very special guest with us today, Steve Smith, Executive Vice President and Chief Financial Officer of INSG. And are you with us? Hey, Steve, how are you?
Good morning. I'm doing great, Mark. How about
I'm
yourself?
doing great, thank you. Very excited with the opportunities that 5G has been offering us. We all know how fast it is and how amazing it is. A lot of people that I spoke to, believe it or not, were actually a little bit surprised by how much faster 5G is than 4G. But from a lot of estimates, I've been told it's like 100 times faster. So it just looks like an opportunity that is just going to be amazing in the future. Most of us that I'm talking to, and if you don't know already, INSG was our 2019 Stock of the Year based on its opportunities in 5G. And there's a lot to discuss today. So if you could just take a couple minutes, just give us a simple overview of the company, a little bit about the history and how the current management, for example, got put in place.
Yeah, absolutely, Mark. I'll jump right into that. But first, let me just do my legalese here and just run through the safe harbor statement. This presentation or my commentary is likely to contain statements about expected future events that are forward-looking and subject to risks and uncertainties. For these statements, we claim the safe harbor for forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. For discussion of these factors that are factors that could cause actual results to differ materially from expectations, please refer to the risk factors in our filings with the SEC. And in addition to that, we're likely to talk about non-GAAP financial measures, and as well there you can find reconciliations of GAAP to non-GAAP in our earnings press releases. So with that and the legalese out of the way, I'll jump right in, Mark. So Novotel itself was the progenitor of the company, and that got started back in the 90s. And Novotel pretty much built the hotspot business and has been part of the wireless landscape since the mid-90s. Now, fast forwarding to 2015, the company had acquired a couple of new companies, namely Digicore, telematics company based out of South Africa and Europe, and Fini Wireless, an IoT company based up in Oregon. And so during that time, the company had taken down a $120 million indenture and went out and bought these companies. We were brought in, well, let me just jump forward a little bit more. Novotel was then put on the block for $50 million to TCL, the Chinese conglomerate. Well, the long and short of it was, by the time we got to mid-2017, CFIUS, the government entity, had put the skids had decided to disallow the transaction to go through, and we were brought in to turn the company around. So we got in the company. Dan Mondor, who has done, this is his fourth successful turnaround. He's done 2 other public companies and a private equity firm. So this will be his fourth successful turnaround. Came on board June 7th of 2017 and embarked on replacing the management team. Dan recruited me, brought me in mid-August of 2017. Ashish Sharma, our CMO and EVP of IoT and mobile, at about the same time, and then we fleshed out the balance of the management team. And I'll talk more about specific individuals in the management team in just a minute. One of the things we embarked on doing early on was developing a cohesive strategy and pretty much a mission statement for the company, and then beginning execution on that. That happened in 2017. We took out, in the first 6 months we were with the company, $30 million in annualized OpEx. A lot of people look at that and go, well, how the heck did you do that? Well, the 2 acquisitions I mentioned that were done in 2015 were never integrated into the company in any way. So INSG, as we walked in, was a microcap holding company. We changed that into 2 basic business units: IoT and mobile, where you're going to see the 5G opportunity, and enterprise SaaS, where we have the telematics and our other SaaS business. But if you look at enterprise SaaS, it is connected as another IoT business, given that we put a cellular device in the vehicles. So let me just talk briefly about some of the individuals we brought on, because our objectives are going forward to build the business in new geographies with new products and new service providers. So in 2018, we started building out the sales team, specifically at the top of the house. We brought in Mark Frisch as our SVP of Service Providers, focused mainly on providers. We brought in Rick Harris to build out the channel for the IoT devices. And keep in mind, IoT runs everything from, it's just a very wide topic, but we focus on industrial IoT. If you look at IoT in and of itself, it goes everywhere from doorbells to, controls in oil and gas. We're on the industrial side. We focus on enterprises, SD-WAN, digital signage, and that sort of thing for applications. And then in late 2018, Simon Rain, our SVP of sales for EMEA, Asia Pac, he's based over in the UK. He focuses on the rest of the world, of which there are many opportunities. And put the scale of those opportunities in perspective, Verizon themselves have about 100 and, well, as of the end of 18, had about 154 million subscribers. AT&T about 150 million subscribers. Sprint, T-Mobile together had somewhat less than that. You look outside of the Americas, and I'm not counting any Chinese or Indian subscribers. The scale of the international subscribers relative to the U.S. subscribers is about 4 to 1. There's about 2 billion subscribers outside of the United States, again excluding India and China, that are in the different with the different service providers. And just to give a couple, American Mobile 278 million, Vion in France. They're not France, but Vion is about 211. Orange in France is 210. So you can see that the number of subscribers outside of the Americas is a much bigger market than just staying inside the Americas. So we've got our plans include growing inside the U.S. Or North America, as well as pushing to grow outside of North America. Now, Mark, you mentioned that you see 5G is 100 times faster than 4G. And that's true on the technical side. But the other phenomenon that I think people are missing here is the adoption rate of 5G. It's eclipsing what we saw with 3G and 4G relative to carriers adopting and moving into new programs. If I just back up to the beginning of this year, at the beginning of this year, we had 5 active 5G opportunities underway. And worldwide, there were about 70 service providers that had active 5G programs underway. Bring that to the end of July, there were 235 service providers around the world. So this is 235 different service providers, the size of, and I'll just throw out household names, Orange, Vodafone, Optus, Telia, just many throughout the world. 235 had active 5G programs. Now, I put that in our perspective for INSG. We had about a handful of opportunities, or 5 at the end of 2018. Today, we have over 30, and that was as of the end of July, and it's probably beyond that at this stage because we're getting indications every day. And we have 12 active trials or tests underway currently with different service providers globally.
I mean, that in itself is just a phenomenal, phenomenal opportunity. And I wanted to discuss with you further opportunities potentially regarding Inseego. That number actually was way better than I expected. The 2 billion people you said outside of India and China, people know that India and China have the two largest populaces on the planet. So when you're able to find anything close to that number, even outside of China and India, you're pretty much dealing with a huge percentage of the planet, and that is just absolutely phenomenal. And Seago said it currently has the only working double M wave 5G hotspot on the market. How is it that you were first to market, and how long do you expect it to be the only one?
Yeah, great question. So again, we go back in time a little bit to the third and fourth quarter of 2017. Dan had brought together the team, including Ashish, myself, and we had a gentleman by the name of Chris Lytle involved with the company at that time. And we embarked on putting together the strategy, since we couldn't find one in the company, put together a strategy for the company, which included pushing into 5G. At the same time, because of our relationship with Qualcomm, and if you look at where we are in San Diego, we're surrounded by Qualcomm. And we've had a very tight relationship with them for a number of years. So the relationship with Qualcomm and Verizon, the three of us put together a partnership. We announced that in October of 2017 to make the first real 5G NR device. And I think that's the biggest thing is we work together with our customer and our key supplier being Qualcomm to make 5G real. The 5G hotspot, millimeter wave hotspot, began shipping in July to Verizon. They're now selling it. Obviously, there's it's going into the markets where there's 5G, and if you're in a market where there's no 5G, it's going to operate on the 4G bands. They're backward compatible.
Wow, that is very interesting considering all the towers that are going up. I know even in my neighborhood right now, they have like a new cell phone tower going up, and it's just amazing how these things are going to just be popping up everywhere as 5G becomes a lot more accessible in the United States. But I guess also what I want to know is who is going to be your competition, and what really differentiates Inseego's products from the rest of the markets?
Yeah, we don't really give a lot of airtime to our competition. It's you can see who we've competed against in the past, and it's going to differ market to market and product to product. But keep in mind the direction that 5G is going in. It's going to be bifurcated between mobile devices and fixed wireless devices. So the fixed wireless side becomes very exciting. There you're talking about dropping into a home or a small, medium-sized business, a wireless device that's going to replace your cable modem and be able to get services that you're getting today via your cable. You'll be able to get them at faster speeds wirelessly, and that's one of the big pushes. Verizon themselves have said they want to go after 30 million households. That's 30 million households, basically going straight up against the local cable monopolies. This represents giant business, and that's just Verizon saying that. Now you fast forward that to households and small and medium-sized businesses worldwide. The size of the market is potentially staggering.
And on the flip side, I mean, everybody is following the market. Everybody knows about the US-China trade war dispute, and we know that it actually had a negative impact on ZTE as well as Huawei. What kind of impact do you actually see on the flip side that the issues with ZTE and Huawei can actually have for potential? Is there any impact for Inseego in this case?
It's actually been somewhat of a favorable impact on Seago. It's opened up doors to us getting into additional accounts. The the fears and the the concerns around Huawei and ZTE are actually spurring companies to look outside of them and find other sources. In the case of U.S. carriers, where there was a ban, and the ban goes off and on periodically, but they don't want to run the risk of running out of supply. So what ends up happening is they decide to move to another supplier, and as Dan frequently says, that toothpaste ain't going back in the tube. Because once they've moved to another manufacturer, the qualification cycle, the adoption cycle, it's hard to go back on, and the carriers don't want to get caught in a position where we don't have a device to sell to the public or to enterprises. So it's the sort of thing that is going to be avoided.
Understood. Just going back to the call, you were talking about those 40 carriers engaged and 13 field tests as of June 30th, and there were 8 to 10 design wins by the end of the year. And I just want to set level expectations here. Perhaps you could just walk us through a typical engagement with any carrier in 5G. And if you can touch on basically how long, I want to know, it takes from the initial engagement with that carrier to a design win, and then how long before you get this certification potentially, and then how do you get that to work with the supply chain setup before you can actually deliver this product? Like basically, I guess the A to Z engagement, and how would that look like?
Yeah, so it's not cookie cutter because it's going to vary for all the carriers. Some of the stuff we did in the design of our product actually helps us accelerate the engagement worldwide with the different service providers. So to put that in perspective, when we look back at what Inseego was, it was designing yet another hotspot for almost a single customer. When we came in, we changed the design paradigm so that we built into all our products virtually all the bands that are required. And these are RF bands to go worldwide with our product. So what does that mean? That means to have a product that can go into a carrier in, say, Japan. We just have to make some mechanical changes. There are some small engineering changes, but then we just go in and we light up the bands that are required for their network, and we go through the certifications. It shortens the cycle of delivering a product from what was a year plus to now being able to do it in months. Case in point, the gigabit hotspot that we released in the fourth quarter with Verizon, we just released a very similar product in the second quarter with Sprint. In prior generations of Inseego, it would have been Novatel back then. That wouldn't have been possible. So we've shortened that. But when it comes to the carriers themselves taking on a product, this is where they like to play with their food for a while. So it's not something you're going to expect to see, an immediate revenue uptick. We'll see, revenue coming on, and then the ramp will be sometime later. Again, it's going to be very much carrier specific, and keep in mind what we're dealing with is new carriers, new geographies, and new products. So for instance, 5G, the millimeter wave product is what released with Verizon. We're working on sub-6 products, that's sub-6 gigahertz products, with other service providers internationally outside of North America.
Okay. First of all, that is much quicker than I expected. I thought it was more of a dragged on thing in order to, a year, as you said, now being cut down to months is just a phenomenal way to expand quickly. That's actually much better than I was actually thinking it took Inseego to expand. So
that's on being able to have a product that we can have in their hands. Now, there's still the cycle of the service provider's adoption cycle, and that's the part where I use the term that I coined from Dan. They like to play with their food for a while.
completely understood.
Yeah, the service providers don't want to have a product that's going to that's going to be glitchy. The service providers are looking for a quality product. We actually sell our product as a premium product. It's very robust, very solid, and we have all the functions, features, functionality, and quality that's demanded by the service providers globally.
Okay, just going back to the revenue numbers you were just talking about, mobile revenue was pretty much dependent on selling this hotspot to Verizon. I mean, we see all the commercials, we see what these companies are doing. We saw Sprint and AT&T added for 4G gear. So my question is, given all these 4 and 5G engagements, field tests, and design wins, how many of these carriers do you think are actually going to be selling your products by the end of 2020?
By the end of 2020, that's a great question. We haven't really disclosed a number that are going to be selling our products at the end of 2020. Suffice it to say, our focus is new products, new geographies, and new service providers. So while we haven't disclosed a number, I'd say it's going to be, and I hate to sound trite, but a lot more than we have today. Relative to 5G design wins, the 8 to 10 that we said before, we're completely confident with that.
Beautiful. Okay. So we looked at the numbers. Most of the mobile revenue for Inseego is still 4G related. Can we expect that to continue growing for some time? Will this 4G revenue like increase or decrease as more of this 5G gets rolled out?
4G is going to be around for quite a while. If you think about the rollout of the networks, to get 5G networks rolled out everywhere, it's going to take years. So expect that 5G will begin ramping. You'll see some in 19, and then through 20 is where we'll see worldwide much bigger, much more growth on 5G. But people are starting to buy 5G devices because they are backward compatible to 4G, and so we're going to see a bit of both.
Yeah, that's very interesting because Apple was considering releasing a 5G phone, and it's funny to release the product when the 5G isn't really widely available. So you could already see a lot of the biggest companies on the planet starting to expand and open themselves up for this potential 5G opportunity, and it's very exciting. I wanted to talk a little bit about the telematics business over at Inseego. What are the dynamics at work in the fleet and the South African business?
Yeah, another great question. Apparently, you've done your homework. The So South Africa, we did bring back a seasoned veteran to run the South African business, and he's focused on a couple of things there. We had earlier had a big push into this is prior to the new team joining, to push into the consumer market in South Africa. Now, telematics is a big thing. The consumer business is mostly the dot on a map, stolen vehicle recovery, low jack sort of business. But the ARPU, or recurring revenue, and the fact that a device is put in the vehicle had a long payback, low ARPU, high churn rate. It was not a business that was smart to stay in. So in early 18, we de-emphasized that business, and we decided to let the book run itself out. And by that meaning, we didn't cancel anything. We just said, as it runs out, it runs out. People can renew their contract if they want to. But we put the focus on fleet, and that is beginning to show very positive results now. When I say positive results, it's the forward-looking indicators being the bookings and so on that are showing a lot of promise in South Africa, year-over-year growth that's very solid. The other area of focus has been in ground aviation. So this is all the vehicles under wing at airports. And there again, that's a business where we're continuing to plant flags in terms of getting design wins and getting into trials. Airlines, whether we're selling the solution to the airport, the airline, or the ground service guys. It differs by airport. Really dictates the time it takes to for that opportunity to gestate and ultimately generate meaningful revenue. But we're continuing to expand there as well. Europe and the UK have been growing at roughly 10% year over year, 10% plus, double digits. The one challenge that we have had is all currencies versus the US dollar over the past 18 months have weakened, in particular South African rand. So, we do have some currency headwinds that we've been combating all along.
Well, sticking with the aviation answer you gave here, going back to Dan. Dan came out and he said that he expects aviation to be $1 billion opportunity for Inseego. Was he talking about like the total available market, or was he just expecting that much, for example, in revenue?
That's the total available market, is $1 billion.
When can we expect a material amount of the enterprise SaaS revenue to come from aviation? Like, when could we expect like material numbers to come through with aviation?
Yeah, and it will come over time. I'm not going to give a specific date, but it's just the sort of business that we got to continue to plant flags, get design wins, and win the different aviation markets. And there again, it's the sort of thing that isn't going to turn on a dime and you'll see immediate revenue tomorrow. Each one has a certain gestation period, and they take time to materialize.
Sounds good. Let's talk about the business model of Inseego here. So you were recently at the Canaccord conference and you said that you would price aggressively to win business. Can you just help us here clarify that comment? Ultimately, what will the 5G product margin be relative to the 4G products that are being sold?
Much higher than the 4G products being sold.
Okay.
The real push for us, and right now, in order to make sure we stay ahead of the curve, and we'll go back to the comment made, or the quote by the Qualcomm CEO. If you fall behind in this business, you don't catch up. And when the comment around aggressive pricing was more geared to we need to plant flags, we need to win business. The business is going to be aggressively won by around the world by a number of service providers and a number of competitors, and our intent is to continue to grow the company. We'll have decent gross margins. We'll continue to build up our gross margins, but I'm not going to say we aren't going to try and win business.
Absolutely. Just speaking about the gross margin that you just brought up, is there a gross margin level, say 30%, that you're not going to go below, for example, for any new products?
Our target is to, when we're designing products, our target is to have much higher gross margins than we have right now. But when you ask, is there a target below which we haven't really disclosed, say, I'm not going to go below this a certain level, but suffice it to say, I expect that the 5G gross margins will be very solid and will be a lot higher than the 4G gross margins.
All right, going back to the Qualcomm comment that if you're not constantly getting ahead, that you're going to be basically left behind, was the gist of it. If the product is first to the market and it's a better quality, let's say, than the other products out there, why would you even have to compete with cost in the first place?
The service providers are all very astute guys. There's never a here, just take my price and run with it. So obviously, we're going to be meeting their price points. We're going to be meeting our gross margin targets, But in overall, it's going to be, you have to win business, and business is business. We're not just going to name our price and they're going to take it.
So, what are the margins on the Internet of Things products? We were talking about the Internet of Things before. Where do you think they can go, the margins of I guess, your IoT products?
Yeah. So the margins on the IoT products are very solid, and that's the sort of business. We just released two new products, the Skyus 300 and 500, that are industrial IoT devices. Now those sell through the channel, and they go into, again, anywhere that there would be industrial IoT type applications, anywhere from SD-WAN all the way to digital signage. They can go into emergency vehicles. They're all spec'd to be able to withstand automotive specs from a temperature and environmental conditions. But there again, I expect very solid gross margins on those.
Okay, so I guess that would just leave what percentage of your current revenue is IoT, and where do you think that will go in 2020? Do you think it's going to be expanding potentially?
It absolutely is going to be expanded. One of the things that Rick Harris has been working on is building out the channel. There again, you think of the opportunities in IoT. There are big opportunities, like you could land a whale. So I'll just make up names, not saying that they're the ones, but if you were to win a SD-WAN in a fast food chain that's nationwide, that would be a big one that we'd have as a house account. But there's a lot of smaller sized business that runs through the channel. So we've developed the channel, and we've added a lot of VARs and distribution of VARs so we can handle the channel, because we just don't have the size of the sales force to be able to go after all these opportunities. And there you develop the channel, then you train the channel, and you get the channel to start selling your product.
Okay, so as these products are selling, how long do you think it's going to get, or rather, how long do you think it's going to take to get your overall gross margins into the 30s or higher?
Well, there again, I'd refer you to look at the some of the analyst reports that are out right now. We're going to continue to grow our gross margins through a combination of cost reductions. We moved to Foxconn, and Foxconn has been an excellent partner to have on the manufacturing side. They actually come to us with cost reduction opportunities, and we've got them built in for the next several quarters, identified cost reduction opportunities. So that's on the mobile product. On the IoT product, there we're just going to have to continue to grow sales and increase that. On 5G product, again, there it's new product that'll have to grow. And as we win business, you'll see margins improving as a result of that as well.
Okay, I want to just get a sense for the operating leverage in the model. How much of your synergies are there in research and development right now as 5G expands?
Well, because of the fact that we built in most of the bands worldwide, so virtually all the bands for whether it's sub-6 or millimeter wave, when we bring out a new product, we have absolute synergies. So it's not we can take the board that goes into the mobile device, same board that goes into the fixed wireless device. There's just some small tweaks that are put on it, but it's virtually the same board. So from a synergy standpoint, we get tremendous engineering reuse. On the Skyus 300, 500 product, the same board that here again with some small tweaks for different connectors and so on, but it's virtually the same board that went into the gigabit hotspot is used in those devices as well. So that was another one of our big pushes, is to get as much engineering reuse as we can. The one place where you continue to see additional engineering is when we have to certify on a new carrier network. That has to be done. I mean, we got to pay for that every time we go on a new carrier network, and that can run into into 7 figures.
Understood. So just so I understand, there's a large percentage of the components and parts that could be shared across your devices, but the certification cost, for example, in the Japanese example or any other carrier, that cannot be shared, the certification costs? Just the
No.
components are shared among other devices, correct?
Yeah. So just for instance, if I want to go on the AT&T network with a new device, I could already be on the AT&T network, and I have to certify my new device. If I want to move that same device or a very similar device over to a Sprint or T-Mo or Verizon, I'd have to certify on their individual networks. They don't share the. You're on different bands, and you got to certify on each network individually.
Okay. Well, I mean, you're ramping up your operating expenses as well. Can you just tell us what you're spending that money on and what sort of scale those investments have?
Yeah, absolutely. So we've got a number of products in development, from IoT to mobile products. So that's number one. We increased our R&D, and we're focused on bringing a lot of new products. So I'll go back to my earlier three-prong attack right now. New product, new geographies, and new service providers. So we're increasing R&D and expanding that, as well as expanding sales and marketing worldwide. And when I'm talking about expanding R&D and sales and marketing, some of the other things that we are adding are field application guys to address the carrier needs, qualifications, certifications, et cetera, worldwide, as well as increasing our technical account managers so that we have not just not just sales guys, but very technical guys that can talk about pushing polygons around with their counterpart engineers at the service providers.
Okay.
So all this, when you're talking about international expansion isn't an easy thing. It's something that needs to be done, and especially with 5G coming on so fast, we have to move fairly quickly in terms of getting in front of the service providers, getting in front of their needs, making sure we have people on the ground that understand their needs, and that way any kind of tweaks we need to make to our product are done very quickly, and then get certified and on their networks.
Okay. I mean, you have a 15 to 20% long-term EBITDA target. I want to know a few things here. I want to know, when can you get there? How much of getting there will be a function of your gross margin improvements versus, for example, your operational leverage as the top line grows? And also, after that, I wanted to talk to you about the 25% CAGR number, the compound annual growth rate. It's a very high number, and I just want to know why you think it's achievable.
So let me start with the first question. It is a long-term model that we put out there with 15% bottom line EBITDA. That'll come through a combination of top line growth and margin expansion. It's the only way it's going to come. We have to continue to work on our gross margin, and we have to continue to work on again, new products, new geographies, and new service providers. Now let's go to your last question now. So if you look at the way Inseego has been in the past, it has pretty much been North America centric and single carrier centric. We had one main customer, being Verizon. We expand our horizons both internal to North America, to the other service providers, as well as outside of North America. Look, in the U.S. Or North American, there's about total subscribers, call it, several hundred million. I think it's 500 million subscribers in North America. You go outside of North America, there's 2 billion subscribers, and there again, I'm ignoring
China and India.
And so then you ask the question, well, how can you achieve 25% CAGR on top line? Again, new products, new geographies, and new service providers. That's got to be our focus.
Let's talk about The debt. All the debt is sitting in current right now, so you're going to have to obviously deal with it very shortly. It's not really the first time the company has been in this sort of situation of having to refinance. In fact, that's what you were facing when you first joined Inseego. Can you compare and contrast those two different situations?
Yeah, we're in a lot better condition than we were when I joined the company. When I joined the company, we were had a a senior note that was what, about 7 months away from maturing. Had very few options, and we pulled down the $48 million hybrid note to bring some liquidity into the company and pay down that other note. We have a lot of opportunities right now. We have a lot of alternatives and different ways that we can handle the debt. Now, the reason the convertible went current was that's more of an accounting artifact. The holders have a put that they could put the note in June of 2020. We don't feel that that's likely at all, given that the indenture is currently trading above book value. But it's just basic accounting forces us to put that there. But given that, we have a lot of alternatives available to us, and
With those alternatives, does that mean that we could potentially expect better terms this time around?
I I would expect better terms.
Okay, you push back your 10 million quarter EBITDA goal. Is I just want to ask one last thing here regarding that. Are these revenue growth targets going to come solely on margin appreciation, maybe on gross margin appreciation?
Sorry, you lost me. Oh, revenue gross margin.
Sorry about that. You push back your $10 million a quarter EBITDA goal. I guess what I'm asking is when can we get there, and is that going to solely come on your gross margin appreciation?
I don't come on a combination of top line improvements and gross margin improvements. Uh, and while we haven't guided to a specific time, I think it's not unreasonable to expect it in 2020. But there again, it's a function of top line as well as gross margin improvements.
Was there anything else that you wanted to talk about that perhaps I haven't touched on today?
No, I think we hit on what we're seeing in the 5G marketplace, and the biggest thing is there. You look at the adoption cycle of 5G versus what the adoption cycle was for 3G and 4G. And I'm talking about the carriers investing in it and so on. The auctions in the 5G spectrum have been taking place globally, and there's been billions and billions of dollars spent in those auctions, and just the number of service providers that have jumped onto into the 5G fray in terms of having active 5G programs increasing from 70 at the beginning of the year and growing over 3x midway through the year. I mean, it's pretty phenomenal growth. And again, what we as a company are doing is we're investing to stay ahead of that growth so that we can have again meet the service providers around the world with the proper product and service. So I think in closing, that's really what Inseego is about right now.
Well, as you know, Inseego, I feel is going to be a pioneer of the future in the 5G technology space. There's a lot of very exciting things coming up for your company and everybody involved in the 5G space. I think a lot of the deals with the carriers that you could potentially set up even in the future, I think it really opened up a lot of doors that weren't open before. And I just wanted to thank you, Steve Smith, for joining us here on the Newsbeat Live, the T3 Live Newsbeat Live call, and sharing your thoughts with us today. So thanks so much for joining us.
Thanks, Mark. My pleasure.
All right, ladies and gentlemen, we're officially off now with Steve. I hope you guys enjoyed this Inseego interview. Let me know how you felt about some of the questions I asked. Let me, type in the comment sections questions you wished I asked. And it's really exciting stuff. So thumbs up this video if you liked it. Happy trading, make money. And I will see you on the Newsbeat Live Trading broadcast.